So I was gonna say too, I know last time people stayed pretty quiet. If you guys wanna ask questions or get involved or scribble on the charts, definitely get involved. It's definitely meant to be a interactive community thing. I think the fact that it's on Sunday and the time zone issue, not as many people are coming as that are signing up, but that's fine too. We'll get it up on the website for everybody. So we'll just start out with a blank chart. If you guys have any questions or anything, you can just go ahead and stop me. Everyone can see the chart, right?
Yeah, it's okay.
Perfect. So we're obviously very, very bearish. Oh yeah, you can totally totally write questions. I will leave my chat box open for anybody that wants to chat. So we could obviously look at the 4 hour right now, and we can tell that we're very bearish. The expectation is most likely some sort of a retracement and a continuation to the downside. If we just look at the size of the bearish candles, very large candles to the downside, very large candles compared to the up candles. So this is a confirmation of momentum. And anytime we're going up, you can see how slow we go up versus how quick we come down. So obviously, in this part of the price action, we're very bearish. The thing you want to do right away is we're not going to map 4 hour structure because, like I said, it's very bearish. But we do want to find some possible areas where the 4 hour time frame is going to react. And the easiest way to do that is look left. I'm going to shrink my screen a bit. You guys won't be able to see this too well, just so I can pull a few zones, because we actually have to go quite a ways here to find an order block, find a demand zone. So we have a couple areas here. So we could say we have a 4 hour demand zone down here. Call it a 4 hour demand. And we obviously have the demand zone that we're currently tapping, which is also a 4 hour demand. Alternatively, below this, we have this zone. If we go below those zones, we can definitely scroll back over here. For the time being, these are the most relevant zones we have. And yours kind of been a little bit annoying that way lately. We've had to go pretty far to the left to pull our zones. But we'll see what it does here. Maybe we'll see a good retracement. Or more than likely, it'll continue to the downside. Okay, so we actually I don't think we need that other zone. We're reacting off the other one. So just for the sake of the different time zones people are in, I figure we'll keep doing one London session and one New York session. Obviously, London's quite a bit easier to trade, especially for Euro USD. So we'll go down to our analysis time frame, which is 15. And where are we at here? So we're still pretty early. We wouldn't be at the charts. Usually for London, you want to be at the charts at 6 a.m. London time. So as of right now, you wouldn't even be at the charts most likely. So we'll just move that over. Maybe actually, let's see, is it there we go. Perfect. So just looking at this, we're going to fast forward a bit here, guys. And we are 5:30, so we're still a little bit early. So right off the bat here, we do have a couple of little supply zones, or demand zones rather, I should say. So this is kind of our most recent demand zone on the 15. So we'll definitely identify that. What are we at here? 545. We could probably go forward a little more. So right off the bat here, you would notice that we do tap into the extreme of the supply here. The reason this zone gets tapped is this is our initial flip zone, and you want to find these flip zones because a lot of times price will return to the flip zones and we'll get a reaction. The next thing I want you to notice is we have this sort of a doji. That's our most recent demand because it gave us the last drive up. It is also the reaction point to the next demand, which we're reacting to right here. And what this is allowing us to do is find the reaction points and what took them out. So if we call that our reaction point, and then we have one more over here. So right now, with us being bearish, the chances are is we're going to continue bearish, likely deeper into this OB, probably see some kind of reaction. The flip side scenario is that if we go to the 4 hour, which would be the top of that to the top of that. So the scenario one is the ideal scenario. We come into equilibrium, continue down. Scenario two is price is so bearish that it just continues on down and these supplies are to be respected. Obviously, we can never predict. So the thing we start doing is we start looking at who's in control. In this case, right now, supply is in control. A, we're bearish. B, we just broke a demand and we just broke a second demand. So this is on the 15. So now if we just look at this, what would you say is your most recent supply zone if you had to pull one? Does anybody want to annotate or say where it is? You guys should be able to draw on the screen. There should be an annotate button somewhere. Exactly. Exactly. Anytime we see these wicks, that's exactly what we want to see. So we're going to roll with that as the most recent supply zone. So now that we have our supplies pulled, we should establish what's strong and what's weak. So right off the bat, we can say that this area is strong because it took out these lows. We had this drive down. So if we want to look at what's strong and what's weak, 15's bearish, daily's bearish, and 4 hours bearish, I could assume that this low is weak. And if we're going to pick a direction and be completely biased, we're going to go with what market structure shows us. At this time, we're obviously very bearish. And for the time being, we can just go down into our execution time frame. And every once in a while, we'll just return to the 15, see if there's anything else to see. So right now, we're still a little bit early. Frankfurt doesn't open till 7. And majority of the time for you guys that are trading London, you'll likely be at the charts, 6:30, 6 o'clock somewhere, and you likely won't take a trade till Frankfurt open because that's kind of when the volume starts kicking in for London. So just to make note on the 1 minute, you do have a flip zone here. You'll likely see some kind of a reaction from what took it out, which is this gray candle here. I'm not going to pull it across. I just want you guys to be aware of. We'll likely get some kind of reaction inside the supply, the 15 supply, and be able to play it. But it's always good to be aware of where money switch hands. I personally mark reaction points, and yeah, you'll get quite a few after a session. I'll usually go back and delete them after. So right now we're just kind of waiting for the 15 POI to get hit. And so we did tap into our 15 POI. Depending on your guys' risk tolerance and how you manage and stuff, you do have opportunity. One would be this entry right off the bat. The reason that's an entry is one, we tapped into a flip zone here, and two, you tapped into the 15 supply. Both of these make it an pretty okay entry. This would be the riskier entry. The safer entry would be to wait for a chalk, which we will get at some point, even if we don't get one right away. So you do get a chalk right here, right off the bat. So here is where the discrepancy comes in. So our last demand would be this zone here. What took it out is this gray doji. However, anytime the extreme and what took it out are touching, you can always bet your money that it'll likely be the extreme that got tapped. So whether or not you took this first entry is up to you. Like I said, that's a riskier entry with the session timing. No, the fact that it's Frankfurt Open, this would be an okay entry. Now, something I want to mention right off the bat, guys, is if we find 3 or 4 or 5 entries in one area, one supply, you only want to be in one of those, because ultimately what's going to happen is if you're in all of them is you're just going to take unnecessary losses, and I don't recommend doing that. Ultimately, we're just going to look for the one entry. You don't need to be in every entry. I mean, it's nice to be in every entry, but what we're going to do is we're going to identify every entry, and how you guys want to manage is completely up to you. So this is our first entry, risk entry. Opportunity 2, which is probably a little bit safer, would be this wick, because it's the flip again. You have inducement sitting right. You have inducement sitting right underneath it. So whether or not you got into that, like I said, it's completely up to you. For the sake of the back testing session and the fact that we don't have any real risk, we could say that we took the first one. We could even say we took the next one, whatever. We don't have to mark them all. As long as we know that one of these entries was proper. Like I said, again, you don't want to be in all of these entries. That's not what I'm trying to show. So right here, right soon as we cross this line, the way I manage is, so we'll count that as a boss. Right here, I would adjust my stop to break even. So this position would no longer have any risk, meaning that if price does return here, it'll likely take us out, but we won't lose any money besides commission, maybe a little bit of slippage. The alternative is to partial out and leave your stops open, which is a management tactic I used to use. The good thing about it is you do stay in the trades more often. The bad thing about it, I found, is you partial out 20% at 4R, and then you partial out at an area, and then you partial out again. So you end up partialing out a trade like 3 times. So when a trade does run, you don't make as much. The good thing is, though, you do stay in the trades more often. There's good and bad to it. So just from looking at this, we obviously reacted to something. Which we can, we'll go back to the 15 here in a second and basically revisit whatever's happening. as of right now, with everything we have going on and every time frame being bearish, I wouldn't be looking for buys unless we get that 15 chalk. If you're a bit of a risk taker, 2 supply breaks on the 1 minute can be enough confluence to get involved in a buy. However, you just got to understand that there's a higher probability of you taking some hits. And that's totally fine. So we did break even on that, which is totally fine. So you could re-enter on this position. I definitely cover this high wick, being that it's only, you could do like 1.82 pips. That's still a pretty small stop. So in this case, you broke even. You have no risk on the first position. You could definitely re-enter this second position. That's option A. Option B is we can wait for another chalk and flip. And a lot of the times that is what I'll do. For those of you that have gone through the course, you'll notice that I pushed that very heavy. So right here, we have a sweep of the highs. This will probably be your first, this is the first chalk that we've seen off this supply. So we have chalk top and we have a chalk bottom. So it is a bit of a large candle. Depending how you guys manage and stuff, if it's a really large candle, I rarely take the whole candle. And the good thing about that is I can get my R's up by taking less. The bad thing is you will miss trades. So a lot of times, how consistent is the touch of the POI after the first 2 touches? Honestly, if you're with trend, this POI can get tapped 10 times. Like sometimes it gets mitigated once if it gets run. Sometimes it'll get mitigated 5, 6, 7 times before it fails. There's really no way of knowing for sure if this is going to 100% hold or if this is going to let go. What we do have on our side is daily, 4 hour, and 15 are all bearish. So if I did have to play this POI 3, 4, 5 times, I would rather do that than play a demand zone that many times because the demand is very likely to fail. The supply is more likely to hold because we're with trend right now. So anytime we could use trend to our advantage, we definitely do. So you can reduce this to, let's see, that's 1.7. So you can reduce this to 2 pips. And just to reiterate, guys, you would not be holding all of these. Just showing the entries, you would likely only be in one. If you're in this position and you got back in here, you would likely not take this. Myself, I would probably not be in either one of these. And, well, no, I would have broke even on the first. I wouldn't have been so much, let's see. No, this is our chalk. So the second I'd be in, the first I wouldn't. If I wasn't in this position, this would be the next one I look for. We always want that chalk. And no, you don't always get it. But if you do wait for this, you do have a higher probability of your trade going. So that tagged us. This is probably the safest setup I've seen. We got a lot of momentum, which is exactly what we like to see. By a lot of momentum, I mean this is the biggest candle we've seen this session so far. That's a very good sign. I measure candle sizes and I measure how fast we go up and how fast we go down. That kind of helps me go with the theory of who's in control. So let's just go and we can examine the 15 here. So just from looking at this, realistically, depending how you manage, with us being bearish, if you were really safe, you could take partials here at this low, or you could wait to take partials here, or you could take partials here, depending what our R count is. So let's pull that down. So to this low is barely a 5R. I likely wouldn't take partials there. Myself, I'd probably go to here, and I'd probably take some partials there, take 50% of your trade off or something, and leave the other 50% to run that low. The only reason is this London time zone. Yes, it is. Yeah, I always run London time zone. I got trained like that right in the beginning when I used to actually trade different system altogether, session highs and lows. And I ended up sticking with the London time zone because London changes their time over before North America does by 2 or 3 weeks. And as long as you're always on the London time zone, I found you're on the proper kill zone times more often. There is a 2-week period per year where the kill zone slightly changes, but as soon as New York changes their time over, it matches up again. So as of right now, you're good till the next time change anyway. But I just keep my clock on London hours. London moves the markets. London has the major volume. So yeah, that's kind of what we're going to go with, guys. We're going to go for this low and obviously partial out. For those of you, if you have trouble holding a trade this long, there is nothing wrong at all with paying yourself here. I don't have a problem with holding this because we're in the direction of every single time frame and the market structure. Yeah, absolutely. We can go back to the 1 minute. I was also, yeah, absolutely. I was actually honestly about to bring that up. Yeah, that's always a possibility. But you also got to remember New York doesn't open for a while, and this will likely generate more liquidity. So this is the next thing I wanted to mention. Some people really like risk entries, and one of my buddies, he's like notorious for trading risk entries, but his rule is he'll only put a risk entry at the very top above all the inducement. Yeah, that's right. London Open. This London Open does sometimes get run. So New York will do one of two things as always. Will either continue or New York will undo what London does. Yeah. So the concept is Asia provides the liquidity, and more often than not, London will sweep it, induce people into the wrong side of the market, and then go. So this isn't like the greatest example of it, but a lot of days what will happen is Asia will do some kind of garbage like this, and then London will come take it all. Everybody will start buying, and then she goes down. And then depending what New York decides to do, New York will either reverse and completely undo that, which it likes to do, or sometimes it'll continue on, depending what London hit. But yeah, a lot of times we'll use Asia for a liquidity draw. For those of you that have tried trading Asia, you probably noticed it doesn't move very much, and it does a lot of nothing. It stacks liquidity. But for the time being, we can just go on with our plan here. And again, how you guys manage is up to you. Myself, once the nearest low goes again, I will likely break even. So for myself, I'd probably break even when this low goes. If you want it to be extra safe, you could break even when this low goes. Usually once I have a 1 minute break of structure, I'll break even. This one's a little too close for my liking. I'd probably wait for this one, then break even. But however you manage, just have a plan to lose, have a plan to break even. Something I implement too is, let's say price leaves here and it kind of hovers around here. And even if I want to get some risk off the table, what I'll do sometimes is I'll do a partial break even where I'll move my stop down to half as much, so that if it comes back and takes me out, I only lose half as much. And I've actually prevented myself from losing half as much quite a few times. So it is something that you might consider doing, depending how the market structure stacks. The longer price hangs around here, the less I want to have that stop open. And if you can't fully break even, you should at least partially break even where your stop is just above your entry wick. You no longer need to cover those highs. At least that's how I look at it. Again, management's completely up to you guys. But I do like to show all different aspects of it. So let's just go back to the 15-minute. So you did hit TP where we would have taken our first profit. Let's say we partialed out 50% at the first low wick. 50%, you're sitting at about, I don't know, 8.3 R or something, or 4.3 R, I should say, if you took half this off. And if you leave the rest to run the low, and it does run the low, that's an additional 5 R. So right there, you'd be at 9 R with just that one trade, even partialing out. Again, like I said, we wouldn't be in all three of these. Chances are you'd only have one of these running. And the reason is you don't want to put all your eggs in one basket. Let's say you open all three of these positions and the market does this and then comes down, wipes this liquidity. You would rather just take one hit instead of three. I learned that a long time ago. Don't stack a shitload of positions in one area. If that area goes great, you're going to make a lot of money. If that area falls apart, you take 2-3 hits in one day and your trading day's done. Chances are you're not going to want to lose any more money, or your psychology falls apart. Totally up to you. But yeah, myself, I don't like to have multiple positions in one area. At least if you are going to do it, make sure you have risk off the first one. So had you taken this position here, you probably wouldn't be in this. There's just no need to stack them. So we're kind of approaching that London lull, which is the dead volume. Sydney's volume's leaving the market. Asia's gone. So right now, between this time and 12 o'clock, you have a bit of a lull where the volume's low. Everything is a little bit lower probability at this point. Not saying you can't trade it. You just don't have volume on your side. And yeah, you'll definitely find some trades in that time. Yeah, absolutely. Yeah, 100%. I actually didn't even see that. Good eye, man. Good eye. So let's say we did take your trade as well. That one's, well, let's try the correct tool here. 100%. Even if you took 2 pips, which you probably don't need to, you could probably get this down to 1.8, 1.7, somewhere in there. So if you did, for some reason, enter this, you would have 0 risk in the first position. And at this point, you'd only have a little bit of risk, right? Something like this too. Because you have a position that's risk-free, I would break even the second you run this low. This would be break even. Yeah, it actually did. So let's zoom in on that. But you actually look at the wick here. We wicked right below, which is a chalk complete. So you swept the highs, swept the lows, and this would be cleaner on the 30-second. I'm not going to press 30-second because we're going to lose the whole chart. But anytime you see these sell the buy wicks, that's a seconds entry. And a lot of the times I'll go down 2 seconds to investigate where the move happened, especially if we have, let's say you have like a big candle for an entry candle, and this thing is a 5 pip candle. I'll go down to the seconds and I'll find exactly where in the candle something caused the break. So if it's the top half of the candle, then I know that I only need to put the order on the top half. If it's the bottom half, I will likely put the order on the bottom half and only cover half the candle. I'm not a big fan of taking 5-6 pip stops on euro. It just doesn't move enough for that. GBP USD, 5-6 pips is not bad. On this pair, you definitely don't want to be holding that kind of stop often. I mean, if you trade the 5-minute, you could, but I feel like you could even get that down. So, yeah, if you nailed these two off, you probably wouldn't even stick around for New York. But yeah, definitely a good eye. We got induced. And if we got really technical, we actually probably tapped into another higher time frame POI and chopped and flipped. So let's just go look at the 15. So this is a 15 OB. It's not the greatest OB, but if you did cycle through time frames, you would likely find something there. It's a little cleaner on the 10-minute there. And that's pretty much how I find OBs. Cycle from 10 to 30 minute and just pick all your cleanest points. This 10 minutes valid because you took this demand out. So it is showing a little bit of initiative. You create your inducement and there you have your trade. But again, you have something higher time frame behind it. You wouldn't feel bad about any of this stuff in the sense of you're with trend, and how the saying goes, the trend's your friend. And more often than not, you're better trading in the direction of trend. There will be days where you'll take hits trading with trend, or you'll break even, and that's just part of the game. So, this right here, when you see stuff like this, so this is a risk entry. I don't recommend doing it, but the odd time I will do it if it liquidates an area. The only time I'll use a 2 supply break theory is if we run a low. So right here, we ran a low and we expect some kind of pullback. I wouldn't be shooting for the stars on the pullback. I would probably look at the most relevant supply in the zone, which will likely be this. If you did want to live on the edge and take a 2 supply break, you could. Just know that if you don't have a 15 chalk, you do have a high probability of it failing. A lot of times, so here we do get that 15 chalk. I would likely even consider this first wick a chalk. I'd be okay with that. Now, whether or not you want to get involved in this, like I said, these do have a higher probability of failing. The only thing you have going for you is you liquidated the bottom. So you do expect a pullback. Myself, I would want to see it come back in here and chalk and flip on the 1 minute and maybe take it up if I was looking for a buy. Alternatively, you do have the 2 supply break rule. It does work, but it is it's hard on the psychology because it works less often than chalks. But you have 1 break and you have 2 breaks. On the second break, you find what took out the reaction point. You have this doji. Like I said, I don't condone these. I don't want you guys taking only these because in the long run, they're hard on the psychology. If you didn't want to do this, you could find another chalk in this garbage. And I call it garbage because it's not really moving, but you swept the lows, you swept the highs. And if you really want to get technical, this is probably a 10-minute POI. It's likely a wick we're tapping into. So if you really wanted to, here's your 3rd supply break with this chalk. So this would be your safest entry. Seeing how we're very bearish, Myself, if I did want to buy, I want that 15 chalk. So I want this to come back in here and re-chalk. But this is a possible entry. You guys can test it. If it's something you want to use, definitely do. I do use it. I just know that it's not as high probability as the chalk. And all right, so we're still in that dead volume time. I just want to see something here. So we are reacting to this range. I'm just going to pull these wicks because there's some kind of reaction there. So we are slowly tapping into supply. So right here, what would you say all of this stuff is? Like, would it be relatively safe to say that this is all inducement, likely being stacked? Myself, I always look at this stuff as some sort of inducement. With the scenario in mind that we are bearish, I'd also start looking at this stuff as trendline liquidity being stacked to be run. For the most part, this stuff works out. The odd time you're going to draw all this beautiful stuff and then the market's just going to go right through your supply and go up. And there's really not a whole lot we can do about that. But yeah. So now on the flip side, we're also building inducement down below, and you have a flip zone here. So because there's inducement down below and we got our chalk, we liquidated this area. This could be a possible entry. Just know that we do have relatively equal highs, and it's always a possibility this area will get liquidated, but it's also a possibility that that trade does go and we use this for inducement. And it's just one of those things. You either take the risk or you lose the chance. So this right here is a valid trade to me. I'd likely cover that wick. If it gets taken out, no, not a big deal. It is what it is. But with the way it's set up, you got a chalk and flip, you got your inducement, tap this in, and stop loss hit in the same time. That's totally fine. Not a big deal. So this here, we did take a hit on that. You do have the exact same scenario again. And the beautiful thing about that is now you have even more liquidity up here. I would likely, this is a possible entry, but at this point, I want to see a chalk and flip. We just took a hit on that. So usually after I take a hit, I get a little bit stingier and I just kind of wait a bit more. This is probably, so that's probably a good area to, wait for more confirmation. What I found in those cases, that looks like an M. If the second leg of the M is not higher than the first, don't enter. Just wait until it does. Exactly. That's what I'm saying. The first one didn't go for us. Now we have more liquidity up there. Let's see a chalk and flip. And ideally, if we can get a liquidation of the area that just took us out, that's even better. So this would be a valid zone. Yes, I would enter in this if I wasn't in this first trade. Seeing how we took a loss here, we're not going to enter that. Depending on your stop loss, some of you might be in that. Between spread and above that, I would definitely have gotten taken out. I'm very tight with my stop losses. I go 0.3 above, and that's about all I'm willing to do. So we are reacting to this zone, which is our 15 demand. If we go on to 15, we're not reacting to it yet, but almost. Whoa. And for those of you wondering, would I take a buy here? I would not. We didn't actually even tap our demand. Can you measure how many pips the entry of the first trade you mark is? Absolutely. So that one would be 31 pips. This one would be 29 pips. Not the failed trade. These ones, well, we said we'd only be in one of these, right? So this one broke even. Oh, that one. Yeah. I gotcha. Let's see if those were the highs. Maybe you cover 2 pips. Maybe you'd be in that. Maybe you wouldn't. Myself, I know between spread, I probably wouldn't be. So that's a 2 pip stop. Now, if you took this on the 25%, which is a possibility, again, honestly, let's see. I go for more than 2 pips stop for spread. Yeah, see, whereas I don't. I would have took a hit on that for sure. Myself, I would have measured where that top is, which is a 1 pip stop, and I'd probably go 1.5 on this. So depending how you manage, I would have definitely hit stop loss. If you guys are really smart, which it sounds like it, you probably cover this high, and in which case you would be in that trade.
Bro, I have a question, some confusion.
You have what?
Okay. This is our main leg inside. So if you consider this is the above choke, so at least break this choke because there's already complex pullback inside this whole range. So maybe if break this, then we can see the clear choke in 1 minute in this 15 demand. Then we can took trade from here.
You're saying you want to take a trade from this area?
Yeah.
See, like I said, this is a valid trade zone here. It sounds like some of you guys would still be in this trade. I wouldn't. The good thing is if you were in this trade, you would have risk off. I'd probably take risk off when that demand failed. But let's just play it here. And something to mention too is, again, we have inducement here. So let's say you broke even on the first and you did want to try. That is a possibility, 100%. Or there is scenario 2 where we wait for a proper chalk. So this is our 15 demand where we wanted that chalk. If we were going to buy, looking at the size of these candles and the travel distance to the next supply, there's really not enough travel room to even look for a buy. So this one would have failed. We did liquidate that top, like we were saying, was a possibility, and that's always a possibility inside a supply. Now, the good thing is, I'll bet you if we pull this. So I'm just gonna move this over here. I'll bet you the most recent. So if we just count the most recent extreme supply here, and there's a perfect example of the extreme getting nailed on the money. I'm not big on taking these, but like I said, I do have buddies that literally put an order on every extreme. And Euro's not bad. Euro will usually respect these. GU, it'll do something like this and then come down. But Euro's usually not bad. So we'll likely get some kind of a chalk here eventually. So you kind of took these highs here. You took the lows here. This could be a possible area here. I would enter on this range all day long. You would definitely cover that high wick. Definitely. On the flip side of things here, we also have another demand zone. So you don't get tapped into this one quite yet. But if you put an order on this, what is the next thing you're going to do if you see another demand break? Would you stick another order on this? Let's assume that, we either took one hit here, that we didn't take 2 or 3 trades here. Obviously, like I said, I would have only entered one. Would you guys stick another order on the next demand break? I absolutely would. You go with the most recent demand break, and worst case scenario, you eat shit on the first one and it taps you in up top. And I think it was maybe Thursday Euro did that, where it didn't come back, and Thursday or Wednesday, it didn't come back and tap the initial chalk area. So now you got serious momentum again. And I think, did it run the low? Not yet. So that's your proper run of the low. Let's see where we are on the 15. That pretty much shows us what happens. So in this case, on the New York trade we entered, I would have targeted this low, because now this low becomes weak as well, because it never ran the high. So if this high never got run by this low and it did this instead, we can target that low at a bare minimum. And I would take majority of my partials here, 70-80% would be off, and then leave a little runner on. And if it keeps running, great. If it doesn't, whatever, you don't care. But just on the 1 minute side of things here. So obviously that tanked, whether that was a couple of news driven candles or whatever that was. So we definitely hit our TP. Something to make note of too is you have a demand zone here that just became a breaker. I love taking trades off these. A lot of people do not. I'm a huge fan of looking for a trade in here. And the concept now would be, if it taps the breaker, that this low becomes weak and you could try trading it. If it comes down here and this holds and it runs this supply, then I would trade this back up into this supply. So whatever's going on, have a plan A and B for what direction you want to go and why. I would like to see how it's moving on the seconds. With how far back we are, we'll lose the chart if I go on the seconds, but I could put a fib on the leg. So yeah, you're dead 50% there of the fib. Not my favorite place to take a trade. If you get just above it though. But if you guys go back to the teaching, something I mentioned too is the fib is a little bit subjective. And I found that on 10% on either side of it is kind of the sweet spot. As 50% doesn't always get tapped, but ideally, 100%, you want to sell above that 50%. So you have equal highs again. Some sort of inducement's been stacked here. Again, if you did execute, where is our tool? If you did execute that, $2.2, somewhere in there. So just to our target alone, you would have got 7.8 R. Let's say you partialed out 80% there, took 6 R on the day, leave the little runner on in case it keeps going. Obviously, we never know it's going to do these big candles, so it's always good to pay ourselves. Yeah, you have some sort of inducement here. Depending how late you are in the session too, right? That totally is up to you guys. The later it gets in New York, the less I want to trade. Like this is still within trading time. You just took the inducement. You're tapping this inside bar here, actually. And you can just see what it does in here. So for myself, trading only New York, chances are I would only have 1 or 2 of these opportunities. Obviously, I don't get to trade London. So you did have a chalk here. You did take the inducement. You are bearish. On the fib side of things, you are just tapping into premium, actually. If you did want to take this because of your chalk, this could be a valid trade. If you were in the first one, you might take this, you might not, totally up to you. And I wouldn't be shooting for the moon with this. Again, run this low, take 80% off. But it's definitely something to consider with these. So we got taken out of that. You would have likely taken a break even because we would have gone break even here, which is totally fine. It does happen. You could try and enter in the next chalk, or you could just leave it. It really makes no difference. Let's see. So your cost. So this is kind of a weird one. So you have entry 1 would be right here. Entry 2 would be right here. Now, anytime the two are touching, I always like the extreme. The only other thing is we have a wick on each side. If I did want to get in this, I would likely toss an order on both. If you investigated on the seconds, you would find exactly what caused this break, whether it's up here or in this wick. So this is one of those scenarios you would take a hit on one if it comes to the extreme. But without going down to the seconds, you wouldn't know where to enter that. So just to... It is a rather big area to cover, though. Let's say that you do get topped. 3.2 pips. Ugh. I doubt I would have taken that trade. Well, there's a 5R. No, I'd take that. As long as there's a 6R, 5R to the bottom, I'd take that. I don't love 3 pip stops on Euro. I definitely do not. But again, you'd be your risk off as soon as this lows run. So we would have likely broke even on the first one. Even if you took a loss, it's not the end of the world. So you did run the low here. you did secure your 6R. And like I said, you'd probably partial out 80%, maybe leave 20% running. Ultimately, yeah. So in this particular session, we were very bearish. You see something like this, the bearishness is likely to continue. Anytime you see this kind of stuff stack, though, that to me is a future POI to run. That liquidity is just sitting there. Have fun. You bet, man. So, yeah, we'll cut this backtesting session here. I'll get this up on the website. And yeah, everything's all well. We definitely hit our TP of running this low. For those of you that left any runners on, this would probably be a good place to close the rest of your position after you ran this demand. You know, always secure your profits. No use leaving money on the table, or at least take something off. If you had 20% running, take another 10% off. But yeah. Does anybody have any questions, or are you guys good if we end it here? Thanks for the info. All right, guys. Well, I'll get this up on the website later today. Thanks for showing up, and I will get the link up for Wednesday's midweek Q&A. For those of you that are able to make it, definitely sign up. And those of you that can't, that'll go up on the website anyhow. So yeah, thanks for coming out, guys, and have a good rest of your day.